Hey everyone, welcome to another video by Optionables. My name is Saket, and unlike the other videos, today in this video we are going to discuss about the trades what we hold and what is the logic behind the same. So in the previous videos we were discussing about the market outlook and what happened to the market to understand what trades we are carrying for Wednesday and why exactly we ended up taking the same. So I'll be going to the screen recording and showing that to you in a while. Meanwhile, I also have a lot of exciting things to tell you guys. So starting this Wednesday, not just this Wednesday, all the upcoming Wednesdays also will be doing live trading session on YouTube. So this Wednesday we'll be having a live trading session from 10 o'clock. So we'll be logging into YouTube at 10 o'clock and doing a complete live trade end to end. And not just that, even in the upcoming weeks, we'll be doing a live trading session on Wednesday. Not just that, starting this Wednesday again, so you can visit Optionables blog section. So I'll be attaching the link in the description below. So you can go to the Optionables blog section where you get to see the market outlook by the Optionables team. Every morning we will be sharing the outlook, what is the support, what is the resistance. So our team will be updating before 9:15 a.m. every day. So on top of this, so there were certain bugs reported in target this Thursday and Friday. So we have fixed everything. So right now we have done a considerable progress with the target app. We have fixed most of the major bugs and we are hopeful of launching this on 15th of August, which is the 75th year of our independence. So now I'll be quickly taking you to the video where I'll be discussing the logic behind taking the positional trades. So meanwhile, if you are liking the video, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining. Hi everyone, welcome to the video. So in this video, I'll be mainly discussing about the positions what we are holding and why exactly did we end up taking this trade. So the main positions what we hold in this is the 38,500 short straddle. As you can see, we have a 38,500 put shorted and 38,500 call shorted. So I'm going to discuss about the logic why exactly we ended up taking this trade and how we plan to adjust in case if something goes wrong and what is our overall trade idea. I'll be using Sensibull for this to explain the payoff graph and how exactly we intend to adjust. And the thing is that tomorrow we'll be doing a live trade since tomorrow is Wednesday, and I'll also be showing you the same adjustments or the same logic being applied tomorrow live. So the first and the foremost thing would be why exactly did we choose 38,500 short straddle? So what was that we looked at before taking this 38,500 short straddle? First, I'll be telling you based on the charts. So this is Bank Nifty chart, and when I make it daily, so you do see that Bank Nifty is in a clear up move. So after making its bottom at 32,500, it is just going up, up and up. The main reason for this is FII buying. So if you actually look at the trend in the previous week or the previous month, FIIs have started to be net buyers. So they are buying around 1,000 to 1,500 crores every single day. And this is a positive news because while the FIIs are buying on one side, the DIIs are not selling heavily on the other side. That means there is nothing really that can take the market down immediately. So it's true that the market can open gap down, but the thing is, if DIIs are also not selling, FIIs are also not selling, it's very unlikely that the market is going to go down drastically. So you can see these numbers from last week. So FIIs bought for 2,000 crores, 800 crores, 1,000 here, 1,000 here and 1,000 here. But on the other hand, DIIs have hardly sold. So they have sold for 140, 500, 46. So this is nothing because there is huge buying coming from one institution side and there is no selling from the other institution side. So we know that the trend is going to stay bullish until and unless one institution starts selling heavily. So it can come anytime, but it doesn't seem that it is coming right now because FIIs are in a buy mode. So now let's just zoom into the chart. So I'll just put a 15-minute chart. So when I put a 15-minute chart, so you can see from previous 3 to 4 days, Bank Nifty was finding some resistance around 38,200. So let me just mark this level. So somewhere over here, Bank Nifty was finding some sort of a resistance. So you can see that it tried testing it here, here, here. And finally, it ended up breaking this 38,200 mark. So once it broke 38,200 mark, and it also took support over here. So every time it tried retesting, it actually bounced back. It not just broke 38,200, but it was also able to sustain above 38,200. So this actually made us feel, okay, now 38,200 is a good support because it was a resistance for multiple times. So there are chances Bank Nifty will take some support at 38,200 even if it is coming back. And that's the reason we decided to go little bullish this time. So our downside risk is definitely there is no doubt about it. But the thing is, along with 38,200, we have some good support at 38,000 and 37,700 also. So that's the reason as soon as it broke 38,200, so there were higher chances of market moving towards 38,500 than it was before. So now the thing is, if I were to ask you what would be your stop loss, so it was more likely a close below 38,200. So any close below 38,200, you would rather exit it. But what is the upside target? So Bank Nifty is right now very positive. It is going higher. So upside target can easily be around 300 to 400 points. Given if the positivity continues. We don't know what is going to happen. Obviously, there is some overnight risk which we are taking. So if everything goes right, so we can easily expect 300 to 400 points on the higher side. But on the lower side, what is the risk you are taking? So the risk you are taking is around 100 to 150 points. And this is for a reward of close to around 300 to 400 points. So obviously, you have a huge risk to reward in your favor. So the risk to reward is in your favor. On top of that, the probability is also in your favor. Because FIIs, as I told you the reasons, FIIs are in a buy mode. Second, market has broken 38,200 which was a resistance. Third reason why we feel that there is a higher probability of market going up is because of the open interest. So now when we actually look at the open interest, we get to see there is some strong put writing at 38,200, 100 and 38,000. Not just that, people also ended up closing their call options. Logically, why would people actually end up closing 38,000 call option? It is only if you expect the markets to expire above 38,000, because that time your call will be ending in the money and you will be losing money. If you are expecting the market to come below 38,000, then you will not close your call option. So when we actually look at the overall open interest on this side, so when I actually go to Friday, you do see that there was huge amount of call writing at 38,000. But as we come to Monday, which is yesterday, you do see that it has completely changed. There is more amount of puts compared to calls. That means even at 38,000, you can expect some kind of a support, and there is good amount of short straddles created at 38,200 also. So because of these factors, we can see that the PCR ratio right now is 1.2, which again suggests bullish. So more number of puts compared to calls. So 32 million puts compared to calls. So even that is a bullish factor. So there are actually three factors which is suggesting bullishness. One is the FII data, and second one is the technicals, and third one is the OI. So on top of this, we also have the risk to reward on our favor. The risk to reward can anywhere be between 1:3 or 1:2. So the risk to reward is in our favor, the probability is in our favor. So that's the reason we ended going around 38,500 short straddle naked, which is a bullish trade. So now the thing is, there is obviously chances of things going completely wrong. So what if tomorrow we end up opening with a gap down of around 100-200 points, then everything can go for a toss. If it opens on the positive side, there is no issue. The only issue is opening on the negative side. So that's the reason you can see our break even is above 39,000 and below 38,000 right now. But the thing is, tomorrow, let's say I have put here as a Wednesday. So let me just change this to 9:15. So this is just the expected P&L. It is not going to be very accurate. So this is something what we can expect. So tomorrow, in case if we are having a 100-point gap down, let's say, so even then we will end up making around 1.3 lakh. So in spite of a 100-point gap down, we are still making 1.3 lakh. So now let's say there is around a 250, 270 point gap down near our break even. will still be losing close to around 27,000, because we have holiday today, which is a Tuesday, and tomorrow when we are opening 0.7% gap down, there will be a lot of theta decay which would have happened. So this is again expected. Instead of 27, we might have something like 37, 47, or it can also be 17,000. So we really don't know about that. So in case, let's say we end up opening 2% gap down, right? So if we open 2% gap down near 37,500, so anything can happen. Let's say today China starts bombing Taiwan and market opens 2% gap down, we'll be losing close to around 9 lakh. But the chances of this black swan event happening is very low. And even if we end up losing around 9 lakh, what you should note is when the market has fallen 2%, right, we are losing less than 2%. We are losing around 1.5%. So technically, if I had put all this money in Nifty, I would have lost more than actually what I have lost in the option trade. Very rare occasions it can happen, but one thing is that whatever we lose, it will be equivalent to what we would have lost from Nifty. So even Nifty is falling 3%, even we will be losing 3% of our capital. So it is more or less on the same line. Now we just saw on the negative side, but what about the positive side? So in case if we are opening around 38,500, opening itself will have close to around 4 lakh net profit. On top of that, we have futures and everything put together. We can easily be trading around 6 to 7 lakh on the positive end. And even if we are opening flat, we'll be having close to around 2 lakh as our net profit. So what is going to happen? We'll be seeing that tomorrow live. So we'll be having a live trading session around 10 o'clock. So I'll just discuss certain adjustment ideas what I have in mind in case if something starts to go wrong. So until and unless market breaks 38,000, we are going to hold the trade. The moment market is settling below 38,000, we are going to exit the trade completely. It is okay even if we don't come in profit. Even with a minor loss of 1 lakh, 1.5 lakh, we are totally okay to take it. So the moment market closes below 38,000, we are going to exit all the trade. So let's say it's holding 38,000, then we might short some additional calls like 38,700 and 38,800 to push our break even further down. But we are not going to do a lot of adjustments to this trade because we have taken this based on the trend. So if the market is not able to hold 38,000, we are going to close all the trades. One thing which I would want to make it clear again is that there is no need to adjust each and every trade and make sure that you come to profit. If some level is reached and you feel that okay, markets might not find any support from here, it's okay to exit and take a new trade which is your more comfortable holding. So that is what we are likely to do in case if this particular view goes wrong. So this was a short video on why exactly we ended up taking this trade and what is the logic behind taking the trade, and also how we intend to manage the positions. And also do not forget to catch us live tomorrow on YouTube at 10 a.m. So we'll be having a live trading session from morning up until the afternoon. Even if you have any queries, you can ask it in the live chat section and we would be happy to reply. With this, we also come to the end of this video. And also, if you have liked the content, do not forget to hit the like button, share this video and subscribe to Optionables. Thank you so much for joining.